Hello, I'm Larry Bryant with Lipscomb Pitts Insurance in Memphis, Tennessee. I want to talk to you today about bonds and the underwriting information that is needed in order to underwrite a bond. A bond, as I've discussed, is a financial instrument. It's like credit when you go to the bank, so therefore we're going to need financial statements. We will begin with the financial statement on your company. It would be great if you have a CPA and a CPA statement, but if you don't, we will work with what you have. Everyone will have an in-house balance sheet and profit and loss statement. We will need a copy of that for the last 3 years, as well as the most recent if we're more than 6 months away from your year end. The reason I want to see a three-year statements is to see a track record. Are you making money? Are you losing money? And go from there. Interim financial statements. If you're more than 6 months away from your fiscal year end, we will need to see interim statements. In addition to the interim statements, we will need to see personal financial statements, most recently prepared by the ownership of the company. Anyone who has ownership in the company of more than 10% will need to see a personal financial statement on them and their spouse. Why are they needed? Because this is a credit instrument. We are underwriting on the ability to finance the job that you're entering into. The bonding company has to know that you have the ability to pay the bills, to pay your laborers, to pay the materials, so that if the owner is delinquent in paying you, you can still process the contract and not forfeit the contract. We're also going to want you to have a bank line of credit. It is important that you have established a relationship with the bank and the bank knows the business that you're in, so that if you need to borrow money, they are prepared to lend you the money on a quick notice, as opposed to having to go through a long process, drug out in order to get it. Remember what we've talked about. Bonds are a credit instrument. It is not insurance. The bonding company expects you to complete the job and pay the bills. If there is a problem and the bonding company has to be called in, they are going to look to you to reimburse them, because you are going to indemnify them against a loss. So then there will be an indemnity agreement that the company must sign. There will be an indemnity agreement that you and your spouse must sign. What that means is if there's a loss and the surety company has to pay out money, they're going to come back and look to the company or the principals of the company and their spouses to reimburse them. The cost of the bond, typically the cost of the bond is insignificant. License and permit bonds are typically minimum premium, $100, $250, whatever. Bid bonds, there is no charge for a bid bond. There's a charge for a contract bond only if you're the successful bidder. And the charge for a contract bond for janitorial service will be 1% of the amount of the contract amount if the bond is 100% of the amount of the contract. Example, if it's a $100,000 contract and the bond is a $100,000 bond, it will be 1% of the amount of the contract. Some owners will require a percentage bond, meaning if the contract were $100,000 and the amount of the bond was 20% of the amount of the contract, in that case, the charge will be 2% of the amount of the bond on the percentage bond. Lipscomb Pitts Insurance has been in business for more than 50 years. I personally have been in the bond business for more than 40 years. We are a full-service insurance agency with the ability to write any type of insurance for you and your company. For more information, visit us at lpinsurance.com.